All right, what is a breaker block? So, as we know, an order block is typically something you want to see sweep liquidity. Um, might be a red candle, and a bullish order block would be something like this. So maybe we get a green candle right here. We've swept some sort of low, and then we get another green candle, again, validating this to become the order block. So I draw the line at the open because this is where we're going to get the most precise support. Obviously, the whole candle is the order block, and the whole candle could be support, but that's where it's going to be the most prominent to draw from. So we now know once this candle closes above this, this is not an order block. Now, let me show you something. So when would a break? So a breaker block is in theory, it failed order block. But let's take a few steps back here. That's not really what it is. Okay, a common sense is this. You're probably like, oh, well, if we validate this order block and then violate this, it's probably going to be used as resistance because support turns into resistance and resistance turns into support. So yes, that is the right idea. It's just like an inverse fair value gap. If we kind of get a death candle or a big candle kind of violating this order block here, yeah, it's probably bearish. But let's back up here for a second. What if we've already swept sell side here? What if we've already swept some sort of equal lows? What if we've already swept the low without displacement? And then we get this. Well, does it make sense to reject this? No, it doesn't, because we've already swept sell side. If we haven't, then yeah, that'd be a different story. Maybe we're way up in premium and we haven't swept sell side. Then it would make sense for this to be resistance after it gets broken. So that's kind of what a breaker block is. A breaker block in theory is when we get an order block, we have not swept sell side yet, and that order block, which retail noob traders are going to expect us to bounce off of, just completely gets blown through, and then that's going to act as resistance to bring us lower. So the main characteristic with an order block is it should sweep some sort of higher low first. Okay, so you want us to, so let's say there's buy side here. Okay, let's say there's a wick, there's a candle right here, and this is buy side. Okay, so we have buy side liquidity here, and all of a sudden we dump through this, and then we get this. Is this a breaker block? This would not be a breaker block, okay? Here's why. Well, yeah, this might be bearish, but we didn't run a high. This would actually be a mitigation block because we don't sweep liquidity. But it's still not a mitigation block, and I'll explain why in a second. But we want to see a candle run this high and then go down. That would make this a breaker. That's the first characteristic of a breaker, which I know this is getting advanced. I know you're going to need to see a lot of repetitive examples, just like when you're studying for a quiz. You just need to see a lot of them, or a lot of this answer to know you know what you're doing. Now, a breaker block has to be a swing low. So it has to be a swing low. This right now is not a swing low because there's a higher low, higher low, higher low. But if we get something like this, where it is a swing low right here, this would be a swing low now because we have a low, lower low, higher low, and we broke it, this would now become a breaker. So this is the main characteristic. So this right here, let me just recap this. This right here would be a breaker because we take out liquidity and then inverse the order block back to the downside. Now, the cool thing is we wouldn't, like, if we swept buy side, why would you expect a bounce off the order block in the first place? And if we do get a bounce off it, so what? That means there's probably a higher buy side you're probably missing above somewhere that you probably just don't know about, or you need to go on the chart and review again. But if we do violate that order block, this is to be expected. Maybe we have sell side down here. We already swept buy side, and you see us close below this, and this is to be expected. We want to go lower because it just makes sense because we've already ran stop losses to the highs. We need to run stop losses to the lows now, okay? So it makes sense for this to be a breaker. This would be a mitigation block. You smart people are going to understand in about 2 seconds the difference between a mitigation and a breaker. This is a breaker, this is a mitigation. This is a breaker, this is a mitigation. I'm not going to explain mitigation blocks are the same thing. It's that they don't run liquidity. So let's look at some live examples. We have a candle right here. It's a red candle sandwiched between this, and we run buy side. and we take out some sort of liquidity. So would this be a breaker when we trade back through it? Remember, bullish people are going to be like, oh, we should bounce off this order block. But smart people are going to be like, well, we already swept buy side. Why would we bounce off this order block? There's no point. Because we've already ran stop losses up here. And maybe they're like, oh, there's a bunch of engineered lows right here. I think we're going to run all these lows. There's a lot of stop losses here. It looks like retail support. That's what the smart people are thinking. So they see us break through this. Now, would this be a breaker block? The answer is no. Why? Because it's actually not a swing low. So I kind of tricked you guys here a little bit. This is not a swing low. So this would not be a breaker. It would just be an order block that was broken. And yeah, it does work, but it would not be a breaker technically. This would be a breaker. So these 3 down close candles right here would be a breaker. Why? Well, what do you see here? You see 3 down close candles, which are 3 candles sandwiched between these green candles and these green candles. So this would be your order block. But you kind of see that order block breaks, and when this order block, or now a breaker, which it's a breaker when it gets closed below, you now say, okay, now this is a breaker, we should reject, and then you might take the short after we close below and take the retracement to the breaker and do stop loss at a high and then take profit at, let's say, this low. The full TP would not have hit here, but you would have probably scaled some in this bullish for value gap, just in case. You're going to learn how to scale through a lot of time and energy put in the market. Sometimes I will scale a lot in these bullish for value gaps on the buy side of the curve, just in case this happens. You can see it would have worked out. But you can see 3 down close candles. And why is this a breaker and not a mitigation block? Because we run this high here. So this is our manipulation leg. All right, and this is hindsight. Like, when I'm trading this live time, I don't know we're going to get a breaker. I don't know we're going to get a manipulation leg. I'm just kind of watching. Now I know, oh, the breaker just activated. I now see this was a manipulation leg. So I now know this would probably be a good short. So hopefully that makes sense. So let's go back a little bit. Second example would be right here. So we got a green candle sandwiched between these 2 red candles. We know it as a bearish order block at this point, but when looking from a common sense point of view, it seems as if we were bullish because we kind of got pretty close to this high, did not quite hit it, which means we're going to usually come back to it later. We got a bunch of trend line liquidity here, and what happens when we form this trend line liquidity? It's usually ran. So we usually run all these stops. So from a liquidity perspective, it does not make this sense to reject a bearish order block if we know there's trend line liquidity above and these stops are going to be ran. Because that's how the market works. So when I see this green candle, which is also a swing high, get broken, that would be my chance to maybe long off this breaker block. And then target the top of the trend line liquidity or that higher high from here that was just failed to be hit before. So you can just see it's a order block that you kind of wouldn't expect to work. And that's why some of this is common sense. Like, you wouldn't expect this order block to reject if we have trendline liquidity above. Also, we have these equal highs above here. And the market's always going to prioritize liquidity and stop runs. All right, it's going to want to run stops. So just another breaker that makes sense. Okay, if I keep going over to the right, we got 2 more here. So right here, we got another swing high. It's a green candle. And you can see that, again, this green candle right here would technically become your breaker once it's broken. So you can see this is an order block at this point because we kind of get a big red candle close below it. All right. And then when we go back above it, you're like, okay, it is now a breaker because it's a swing high. It was an old order block that we would not expect to work. Why would you not expect it to work? Again, just goes back to we have equal highs here. We have equal highs here. And we have too much stops up here. And we've already ran stops at low day twice. Do we really need to run them again without running some sort of stops above? And this is where it gets complicated. A lot of people are like, well, the higher time frame's bearish. Yeah, it's bearish, but we need to retrace first before we dump, because we need to generate. How are people going to get filled at these highs if we don't have enough liquidity to dump more? We need to stop more people out. We need to fill orders. Smart money needs to get in somehow. And to get in, they need real resting buy stop orders sitting here so they can get in a short. That's why we do that. All right. So you see this breaker work nicely as support, and you would have targeted these equal highs, and you would have targeted these equal highs. All right. Now we go to here. We got, this time it's a series of two candles. I just realized I thought this was a red candle. It's not a red candle. So this actually would not be a breaker block, but it's the same concept. Let's say this was a red candle. Let's say this was a red candle. This was a swing low. As soon as we close below these, which took out this high, this would be a breaker. And I actually just realized I made a mistake. This actually would be a mitigation block. Why? Because we didn't actually run this low day here. See that? So now let's say we would have wicked here, then this would have been a breaker for sure. But it's not a breaker because we didn't run that low day. Now this is not a breaker either, but it's the concept that counts. This is a breaker right here. See this candle right here? This was an order block. It gets held to support here. Why does it get held to support here but not here? Well, because we have equal highs here. We have liquidity. We don't run all the liquidity, but we run enough to reverse. And again, in live time, what I'm thinking is I'm like, oh, I'm going to buy this order block. All right, let me play a couple candles. All right, there's my first TP. I'm going to sell half here. I'm now going to have a stop loss at break even and do the other target up here. So let's see what happens. Oh, I get stopped at break even. Oh, now this order block that ran, like, to me, I'm thinking, oh, well, I guess they didn't need enough all this liquidity to go up, or maybe there was an SMT. Maybe I'm missing an SMT or something. But at this point, I'm like, okay, when this candle gets broken, this is now a breaker block. It was an order block. It got respected when it should have been because we had equal highs above. Does it really make sense to be respected the second time around when you've already ran a decent amount of liquidity? No, not really. So now you'd switch short here, and again, this is a swing low, so that's why it's so important. And it's also a breaker because we run all these highs. It's not a mitigation block. And then you'd reverse short up that. So that is a breaker. Again, very advanced episode. It's full on noob is not going to understand this. You need to make sure you understand my other bootcamp verse. You just need to go to YouTube, say, what is a breaker block? Look up PDFs. You're going to see a decent amount of what is a breaker block on Google. You just need to see repetitive examples of this, in my opinion. That's how I learned. I mean, it's like studying for a quiz. You just need to see the same thing a bunch of times. So that is it for this video. Peace.